Talking points: NZDUSD struggles to test monthly high ahead of FOMC, New Zealand GDP. Crude oil prices remain bid as Iraq hints at more OPEC measures. Sign up for the DailyFX trading webinars for an opportunity to discuss potential trade setups. NZDUSD outperforms its major counterparts ahead of the Federal Open Market Committee FOMC interest rate decision, but mixed developments coming out of New Zealand may drag on the exchange rate as the economy is expected to grow at the slowest pace since 2015. Market participants will pay close attention to the fresh updates from Chair Janet Yellen and company as the committee expects to begin implementing its balance sheet normalization program relatively soon, but the central bank may merely attempt to buy more time as inflation continues to run below the 2% target. In turn, NZDUSD traders may put increased emphasis on New Zealand's 2Q gross domestic product GDP report as the growth rate is expected to hold steady at an annualized 2.5%. A lackluster GDP reading may produce headwinds for Kiwi. It encourages the Reserve Bank of New Zealand (RBNZ) to retain the record low cash rate throughout 2017, and the central bank may continue to toughen the verbal intervention on the local currency as a lower New Zealand dollar is needed to increase tradables inflation and help deliver more balanced growth. NZDUSD daily chart. Broader outlook for NZDUSD remains mired by a head and shoulders formation, with a pair at risk for a key reversal, as long as it remains capped by the Fibonacci overlap around 0.73330, 38.2% retracement to 0.73550, 23.6% expansion. Need a break close below the near-term support zone around 0.7190, 50% retracement to 0.7200, 38.2% retracement to open up the downside targets, with 200-day SMA 0.7140 on the radar as it lines up with the August low 0.7132. Next area of interest coming in around 0.7100, 38.2% retracement to 0.7110, 38.2% expansion followed by the 0.7040, 50% retracement region. Crude remained bid as the Organization of the Petroleum Exporting Countries OPEC appear to be on course to further reduce supply, and oil prices may continue to trade higher over the near term as U.S. refiners recover from Hurricane Harvey. Iraqi Oil Minister Jabir al-Uabi suggested OPEC will boost its efforts to rebalance the energy market as some, like Ecuador and other countries, even Iraq, think there should be another cut of 1%. While others think that cuts should be extended beyond March, 3 or 4 months, or 6 months, or maybe till the end of 2018. At the same time, the International Energy Agency (IEA) warned that there is at least a possibility of going back to the situation we had 10 years ago, where oil prices were very, very high at a time when demand was growing as the group raises its outlook for global consumption. For additional resources, download the DailyFX trading guides and forecasts. As a result, concerns surrounding Hurricane Maria may keep crude prices afloat as the storm gathers pace, but the recent disruption in field production may end up being short-lived as outputs approach the record high 9,610 BD. Use oil daily chart created using TradingView. Broader outlook for use oil has perked up as it clears the August high $50.40 and appears to be making a more meaningful attempt to break out of the downward trend from earlier this year, which raises the threat for an inverse head and shoulders formation. Next topside area of interest comes in around $52, 50% expansion to $52.10, 23.6% retracement, which lines up with the May high $51.97. However, the string of failed attempts to close above the $50.20, 38.2% retracement hurdle may trigger a near-term pullback in crude, with the first downside region of interest coming in around $48.60, 38.2% retracement to $49.30, 23.6% retracement followed by the $47.70, 38.2% expansion region. Retail sentiment. Track retail sentiment with a new gauge developed by DailyFX based on trader positioning. Retail trader data shows 55.1% of traders are net long NZDUSD, with the ratio of traders long to short at 1.23 to 1. The number of traders net long is 10.9% higher than yesterday and 14.1% higher from last week, while the number of traders net short is 7.4% lower than yesterday and 16.7% lower from last week. Click here for the DailyFX calendar written by David Song, currency analyst. To contact David, email dsong@dailyfx.com. Follow me on Twitter at @davidsong. To be added to David's email distribution list, please follow this link.